Even if you lie about income, the bigger issue might be blacklisting. What's up guys, it's Sebastian from Ask Sebi, and today we're going to talk about everything you need to know about American Express financial reviews. We'll cover the causes, symptoms, and also the outcomes that might happen. Big favor before we dive into all of this is to give this a thumbs up if you want to support the channel. It's annoying, but it is part of the algorithm and how that works, and if you are someone new here, then consider subscribing. We talk about how to use your credit score and the spending you already do to either get extra cash back or to do pretty cool trips. Alright, so what is a financial review? If you do a Google search, the recommended snippet answer is pretty good. It's basically a risk minimalization tactic by American Express to make sure that you don't max out your credit cards and run away. Or at least that's what this Ask Sebi guy says. The last time I did this video was about 5 years ago, so I think it is well worth the refresher, especially given the current economy. When you think about credit cards, at least for this purpose, there's generally two different types. The first one is secured. This is when you put a deposit down and they generally give you a credit limit that matches that deposit. If you put a 500 deposit, they'll give you a 500 limit. On their end, there's no risk because even if you max that out, they have 500. Put another way, it's pretty much an escrow where they don't trust you at all. Number two is unsecured, which is pretty much the opposite. Here they'll look at your credit score and you can get pretty astronomical credit lines. On their end, the big issue here is that this can be gamed pretty easily. There's a lot of things you can do to increase that score, and if you lie about your income, then they're going to be out a lot of money. Interestingly, this is how synthetic identity fraud works. So they'll build up a good history, show off good behavior with pretty basic things. Once they get that big credit line, they'll max it out and run away. And oftentimes, it's not even a real person. In this case, you can think of financial reviews like kind of a middle ground. So trust, but verify. American Express trusted you before, but now you did something to spook them, so they want to verify the information. I think there are some pretty fair questions about why American Express does this, and we'll cover that towards the end. This begs the question, what triggers a financial review? Pretty much anything that would spook you if you were in their shoes. We'll cover a few things, and this is not an exhaustive list by any means, and sometimes even if you do trigger one of these things, it might not cause a financial review. It might cause a mini version of that, but again, we'll cover that. In my experience and looking at hundreds of data points, I'd say that there's four main factors. Number one is if you apply for a card and start using it very aggressively. So for example, let's say you just get approved for the platinum card or the gold card and you start putting $1,000 charges every single day after getting it. Especially if this is your first American Express card and they don't really have a payment history, they don't know how you spend money, and they can't really confirm anything, then it's going to spook them. Number two, playing with the check spending power button. And obviously this does have a purpose and use case, that's why it exists. It's not meant to be a trap, but it does kind of trigger things if you use it improperly. If you're looking to buy a luxury watch for let's say $5,000 or $20,000 and you want to test that transaction, that's kind of the purpose. But if you're playing with it and you're like, hey, what about 20? What about 50K? What about 100K? Then that kind of scares them because they're wondering why you're trying to figure out that maximum. On our end, at least speaking for myself, that's kind of how my brain works. I'm just kind of curious about what the constraints are. Number three, having a payment bounce. For example, let's say you schedule a payment from Chase within American Express's interface, so when they try to go pull the money, there is not enough money. Obviously, this can be an innocent mistake, but it also can be used pretty nefariously, and that's probably why it's a flag. So let's say you use your card and you swipe and you spend a ton of money, you end up paying off that card using your bank balance, or at least that's what they think, but in reality, it's not real money, it's play money. At the same time, they don't realize that, so they think there is a payment and then they assume that you can spend again. Number four, the last one, is increasing your spend more than normal. So let's say you normally spend $3,000 a month on the card and now that jumps to, let's say, $30,000. For this one and pretty much all the other ones, there are reasonable reasons this might happen, but it just looks weird. It might lead to a mini version of a financial review, but something that's technically different. Why would you even bother with American Express? I would never put up with stuff like this. I think the main reason for most people is that they have pretty good cards. I think you could easily argue that they're number one or number two, especially if you are travel focused, given their large portfolio. If you're someone into aspirational travel, then cards like the Bonvoy Brilliant and the Hilton Aspire cards are pretty critical. If you're someone who travels more domestically and you're based out of an airport that has a Centurion lounge, then the Platinum card is a pretty solid pickup. It also has some pretty solid earning workhorse cards. So for example, for the Gold card, you're getting 4x back on restaurants worldwide, 4x back on US supermarkets on up to $25,000 in spend per year, and 3x on flights booked directly or on AmexTravel.com. I would say that the 4x back categories are the key ones for us. Points are worth 1.1 cents per point if you cash it out using Schwab Platinum, so effectively 4.4% back. For aspirational travel, easily 2 to 3 cents per point, meaning that 4x is about 8% to 12% return on spend. And that's only if you care about first class, business class, going to the Maldives, Seychelles, Bora Bora. maybe Santorini, something like that, things that are more expensive. And to be fair, there is a $250 annual fee on the card, but you also get a ton of other credits that help you offset this. First one is $120 in dining credits, broken down into $10 per month. Also $120 in Uber Cash for dining or riding. Main takeaway is that there's a ton of good American Express cards, whether it's spend for the multipliers, intro bonuses, lounge access, or upside via aspirational travel. On that note, if you do want to learn about American Express cards or pretty much any other cards out there and you want to support the channel, we do have links on the website, asksebby.com, and down below in the description box. Make sure the links are competitive, but otherwise, it's a huge way to support the channel, so thank you guys in advance. Outside of these four, I would say that there are some other factors that might contribute, but I feel like they're smaller ones rather than being factors by themselves. Number one, logging into your account and playing with your annual income too much. I've seen some communities recommend playing with it in order to try to do credit limit increases, and I get why you might want to do that, but also on their end, it looks weird. Number two, very high credit limits, especially on specific cards. In the past, at least, having a $25,000 credit limit on one card was seen as a pretty major risk factor. To be fair, I have seen some people who have credit limits like that and who've never gotten a financial review. I think it depends on your income and a ton of other factors. My thing though is that if you are going to do that, if you are trying to have that very high limit, then be prepared for a financial review. If you do not want a financial review, then probably not worth it. Number three is someone else at your address facing a financial review. Similarly, this one seems to be pretty mixed. I wouldn't be surprised if it's maybe based off your last name or the fact that one of you are authorized users on the other person's cards. For example, when I got my financial review, even though Mandy and I had the same address, the fact that I think we didn't have authorized user accounts on each other's stuff meant that we were considered separately. Basically, my financial review did not affect her. Okay, so now that we know what causes a financial review or what can cause one, what are the symptoms? I'd say that they're generally pretty obvious. So number one, when you log in, you might have a pop-up that says that your spending has been suspended. If you have a card on your mobile wallet, then you'll get a similar notification that the card currently doesn't work anymore. And just because you do get this pop-up does not mean that it's a financial review. There are other things that are similar. If you think about it like getting a cold, this is starting to cough. Number two, and more importantly, is that you'll generally get a call, email, or letter from them telling you that they're conducting a financial review. The next part is pretty much getting through the suck, and it sucks. There's nothing really you can do about it though, you just kind of have to either go through it or choose to opt out. Number one, your points are generally frozen. This might be a good symptom check too if you are someone who has that frozen suspension when you log in, but you don't know if you have a financial review. If your points are frozen, then you generally cannot cash them out via Schwab or use it in any other means or transfer them out to partners. In effect, they're holding your points hostage. Number two, all of your communication will be directed through the financial review team. So even if you call in normally and you want to talk to them, they'll tell you that they can't tell you anything and to please call the financial review team. I wouldn't be surprised if your account has a red border or something saying that you can't even open it or they can't open it and they can't do anything. The main reason I mention this is because regardless of how you plead with this person on the line, there's still a customer support rep. They can't do anything. So don't get mad at them. Get mad at maybe the algorithm. I just don't want someone who makes minimum wage getting chewed out for no reason. That team has specific hours and you might not be able to contact them when you want to. Number three, and probably the most important thing, is that they request a 4506T. This is the IRS form to request a transcript of your tax return. Most of the time, I'd say 99% of the time, you do have to do this. Even if your income doesn't necessarily line up, I'd still submit this and we'll run through two examples. I have heard that if you push back pretty heavily on this one, then they can lean on number four, but I think it does depend on your circumstances and maybe your standing and the person you talk to. Number four is them getting bank statements, brokerage accounts, payroll, and other financial information. I'd say that this one is not common at all, and if anything, this one feels more invasive. Most of the time, it's going to be just a 4506T, and that's it. I would say that it's mostly for two different edge cases. So number one is going to be for people who are retired, who maybe do more tax advantage stuff that doesn't show up on their tax return. Number two is if you're someone new to the US and maybe you don't have a tax return for the prior year. So for example, let's say you're from the UK and you end up getting sent to Seattle for a new tech job. Even though you might be making bank, you can't really show that via prior year tax return. One of the things that sucks is the fact that the process can take a pretty long time, generally 2 to 3 weeks. I wish it was a little bit faster, but I think the IRS is the main blocker there, and they probably process it as fast as they can. Okay, so after all of this, what are the potential outcomes? There's three main ones. Number one is that they're happy with your info, and you're good to go. In this case, your cards stay open, your limits stay the same, and nothing really bad happens. It's as if this didn't happen at all. I'd say that this is the best case and the most straightforward one of the bunch. Number two, they let you keep the cards, but they cut the credit limits. For credit cards, the limits will probably be more in line with the income that was on your 4506T, and then if you have any hybrid cards like the Gold or Platinum, then they'll actually have limits. When you log in, instead of saying no preset spending limit, it will say something. This can generally last 6 to 12 months, typically more so 12 months, and it's just a waiting process. I think there are some edge cases where people have called in and maybe gotten around it, but I don't think it's worth the effort. I'd just wait it out. For every one person that said that they called in and talked to someone, there's probably 10 people who told me that they tried and they got nowhere. Number 3 is going to be shutdowns, so they take your cards. I'd say that this one isn't that common unless you decide not to submit your 4506T, or if the person who's looking at it decides that just things don't match up enough and they're too sussed out. If this does happen, I've seen a few different mixed data points. Some people say that they've been blacklisted for a period of time. Sometimes it's 7 years, sometimes it's a few years. Other people seem to be fine and are able to apply again after 6 or 12 months. My guess is that the blacklisting is about 1 year, and that would kind of explain why we have so many different results. Well, I got a financial review, but they never told me that it was a financial review, and I didn't have to submit a 4506T or any of the other stuff you talked about. In that case, it probably was not a financial review. So there are a lot of things that are related to this whole process that can happen to you, but it's technically separate. So for example, let's say your utilization increases, they might end up freezing your cards, so they'll tell you that your spending is suspended for now until you pay off the cards. In that case, once you do, or the cards that are the issue, then you can start using them again. You never had to submit anything because it technically was not a financial review. Number 2, and similarly that I've seen, is if your credit score drops and your utilization increases. Or if you start keeping in balance, then they might just cut your credit limits. Basically, if it is a financial review, then you'll know that it's a financial review. Let's finish off with the 3 most common questions that I've seen for financial reviews. Okay, I lied about my income, or my income is dramatically different. What should I do? Even if you did lie, the bigger concern is getting blacklisted. I'd probably submit and see what happens. If you kind of think of it like a logic tree, if you decide not to submit, then you're getting shut down. If you submit, you might get shut down, but you might also be fine. In that case, it's a 100% chance of shutdown versus potentially non 100%. I wouldn't be surprised if the agent that you're talking to affects this whole process. Going over to Flyer Talk, Hoko dealt with a financial review in December of 2011. He submitted the 4506T and all the other paperwork, and despite this, his account ended up getting shut down. The agent refused to provide me the reason for the closure, but I believe the cause was a discrepancy in my income. In 2010, the year that they requested the return, my salary was from a first-year college graduate working a crappy job. By December 2011, they ended up finding a new job, making $17,000 more. It's kind of crazy to me because it doesn't seem like that big of a discrepancy compared to what I've seen with some other people. On the flip side, I've seen people do master's and PhD degrees who are only making, let's say, $25,000 or $30,000 while they're in school because they're not getting paid as much, but once they go into industry, their salary jumps. So let's say they join Amazon or Facebook as a data scientist, they start to make a good amount of money, maybe 10 times more than what was on their return. In their case, they get the credit limits cut, but they're not getting shut down. Main takeaway is that I would submit the information and see what happens. I think for most people, you should be fine. Might as well shoot your shot even if it misses. Okay, but why does American Express do this if other issuers don't? My guess is because historically, American Express doesn't really have the savings accounts and checking accounts. That's kind of changed a bit, but they don't really rely on that as much. For example, if Chase or something, if you end up racking up a huge balance and they see that increasing dramatically, then they might not care because they can see that your checking account has a ton of money. Or maybe you have your investments with them, but there's just more information. Okay, but why are you even willing to put up with any invasive tactics? I think that's a pretty fair question, and it depends on your view on privacy. So for example, I use Clear. I'm fine giving my, biometrics to a private company, and I also happily visit certain countries that will take those biometrics when you enter. My view is that it's an eventuality, and you might as well benefit while you can. On the flip side, I have very privacy-oriented friends who would never do that, but at the same time, they're just very into crypto. They would never have a credit card even, and yeah, they just don't touch anything that can be identified to them. Obviously, there's levels to it, and it just depends on what you're optimizing for. But I do get why people wouldn't be comfortable. Number 2 is going to be intro bonuses, and the fact that American Express probably accounts for about 33% of them. And for someone that has more normal income or even moderate income, intro bonuses move the needle the most. Getting 4% back on a card is nice, but when you have return on spends that are in the 20 or 30%, that's a lot better. Number 3 that we kind of covered is American Express card benefits. So if you're into lounges, if you're into doing cool trips, just having those cards access is worthwhile. Again, if you want to learn about American Express cards, or maybe cards from other issuers if you don't like American Express, then we do have links on the website, AskSebby.com, and down below in the description box. If you made it to this point in the video, then leave a stop sign emoji in the comments down below, and I'll try to heart the comment and also respond. My question for you is, what's been your experience with financial reviews? Have you had one, or are you scared of it? And if you did get one, would you comply, or is that something that you wouldn't do? Let me know and everyone else know in the comments down below. Big favor, share this with someone who might be affected because I think it's helpful. Give this a thumbs up and consider subscribing if you're new. But otherwise, hope you guys liked it. See you guys next time.